how to forecast the financial markets using the first Elliott wave like a pro, a part, a frame. How to forecast the financial markets using the first Elliott wave like a pro, a part, trade. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders for Elliott Wave Trading. Our website is www.24elliottwaves.com. The title of the video is how to forecast the financial markets using the first Elliott wave like a pro part 3. I recommend to traders who have watched part 1, part 2, to watch also the full length of the last part of this series of video that we call how to forecast the financial market using the first Elliott wave like a pro. In this advanced tutorial about how to forecast the financial markets, I want to talk about how one can use Fibonacci's, okay, to forecast the financial markets with the first Elliott waves. All right? So we are now talking about Fibonacci extension, Fibonacci retracement. So in the first part of the video, we were talking about the shape and the form of, the first wave, and also the shape and the form of each manner waves of the first wave. All right? In the second part, we were talking about how one can validate, the internal wave or the first wave. The procedure going to the lower time frame, use a wave count by comparison, all right? And starting with a preliminary wave forecast and using a different time frame, going to the higher time frame to validate the wave forecast. This is about part 2. In part 3, we are again talking about the shape and the form of the first wave, but now we want to introduce another element, which is the Fibonacci extension and the Fibonacci retracement. How a Fibonacci extension? How can we use Fibonacci extension and Fibonacci retracement, to validate the shape and the form of the first wave? How can the Fibonacci extension and the retracement can help us forecast the financial markets when we are analyzing the internal waves of the first wave? So because the first thing that we are looking for is to find the internal wave of the first wave. Okay? So now we find the internal wave, we validate the internal wave. Okay? So now we validate the internal wave. We are trying to make sure that everything adds up correctly. So talking about Fibonacci retracement, we want to know how deep the second manner wave went down. Talking about we are in an uptrend. I'm using the example of uptrend. So I'm looking at my second wave. So the shape is a kind of a 1, 2, 3 down. Now we will use a Fibonacci retracement. All right, Fibonacci retracement, and we want to know how deep our second manner wave went down in relation to the first manner wave. Is it 38.2%? Is it 61.8%? Is it 50% of the first wave? If it is 61.8%, if it's 78.6% Fibonacci retracement level of the first manner wave, we will expect the real second wave to also go down to the same Fibonacci retracement level. Remember, this is not an exact science. Sometimes there can be a difference between what the real second wave is doing in comparison to our expectation, in comparison to our wave forecast. It will be completely crazy to just buy or sell straight away because our forecast is expecting the real second wave to end at the 38.2% or 50%. One must always use a top-down trading method without assuming anything. All right? So we are now looking at how using Fibonacci retracement to know how deep our second, manner wave went down because we are in an uptrend. All right, and then we will our forecast. So when we are expecting the second wave is underway, so here we are. We say, okay, first wave has ended, the second wave is underway, because we have a bit of information about the Fibonacci retracement of the first manner wave of our first wave. This will help us predict where the real second wave is likely to end. Sometimes you'll be surprised the price will print it exactly as you're expecting. Sometimes the price will kick out your expectation and will print something else out. So it's great to know what is likely to take place, and when it's taking place, you have an edge. It's great to know also what is likely to take place, and if something else is taking place, you know that there is a change. So you may now adjust your strategy, to the current market environment. So we can use Fibonacci retracement level for the second wave to know how deep the real second wave is likely to go down. But remember, the price can print something completely out, and you will be shocked and say, what's happened to your forecast? Yes, the forecast is there to help us, but it's not what the price will definitely print out, so to speak. The next thing, after this, we see how deep the second wave went down. We'll also use Fibonacci extension. So here it is, first wave. We want to know how far the third mana wave went up. Is it going up to 161.8% Fibonacci extension level? Is it 150% Fibonacci extension level? Is it 138.2% Fibonacci extension level? Where did the third mana wave end? Talking about Fibonacci extension level, is it 261.8%? Is it 314% Fibonacci extension level? Now, for traders who do not know about Fibonacci extension or Fibonacci retracement level, go to www.dayprotraders.com. All right, so we will apply the Fibonacci extension to the first wave to determine where the third mana wave has ended, because now we have all the internal waves of the first wave. We want to use now the Fibonacci extension level to know where the third mana wave has ended. Fibonacci extension to determine where the third mana wave has ended, and we will expect the real third Elliott wave to end in the same zone, at least or more, but this is just our expectation. All right, the price may go above or may not even reach the target, but with that information, we can set a target. So if the third mana wave has ended at 261.8% Fibonacci extension level, we can draw that line on our chart. Say, because we have now the first wave, I can now put on my chart the 261.8% Fibonacci extension level. That's my greedy target expectation that the third Elliott wave is likely to end there. You'll be surprised the price may go above it before coming down, or the price may not even reach it. But I have, at least something I can work with at this point in time. I have a bit of information about what is likely to take place. So if what I'm expecting is taking place, if the price exceeds it, I know that something has changed. If it exceeds, I know that the bullish momentum is very, very strong. I can expect a fourth wave to be quite shallow if my forecast. So this is a bit deeper now. So I need to clarify what I've just said now. So suppose, my friend, I put on my chart, this is my greedy target, 261.8% Fibonacci extension level. So this is my forecast. So I'm expecting a third Elliott wave to end here, Now, for one reason, the price went all the way to 314% above my target. So what's going through my mind? I say the market is quite bullish now. If I was in a downtrend, I would say the market is quite bearish now. So if the third Elliott wave is quite dynamic, quite strong, we are likely to see a shallow fourth wave. If in that case, because the third Elliott wave went above or below my expectation, I will now review my forecast for the fourth wave accordingly, because if the market has changed and my forecast is not adding enough, because the price has changed, went above my target or stay below, I may review the next forecast. I don't want to dwell on this one because some traders may get confused. But the point I want to make here, we can use Fibonacci extension, to determine the end of the third Elliott wave. We apply the Fibonacci extension to the first mana wave to know where the third mana wave has ended in order to forecast the end of the real third Elliott wave. We'll also apply the Fibonacci retracement. So we apply Fibonacci retracement for a corrective wave, and we apply Fibonacci extension to the multi-wave. So we apply Fibonacci extension to the first wave to determine the end of the third wave. Now we want to apply what? Fibonacci retracement to determine where the fourth wave will end. So we'll apply Fibonacci retracement to the third Elliott wave to determine where the fourth Mano wave has ended. It's quite shallow. It stopped here, according to my drawing, 38.2% Fibonacci retracement level of the third Elliott wave. So here, I will expect the real, fourth wave to be also shallow and to end somewhere near the 38.2% Fibonacci retracement level. This is my expectation. The price may do something else, but if the price is doing exactly what I'm expecting, well, I have an edge, So by using Fibonacci retracement, we can determine, where the fourth wave is likely to end and where the second wave is likely to end. But this is not an exact science. By using Fibonacci extensions, we can determine where the real third Elliott wave and the real fifth Elliott wave is likely to end. So we can apply Fibonacci extension to the third wave, from the top down to know where the fifth wave has ended. In comparison, Fibonacci extension applied to the third Elliott wave to determine where the fifth wave is likely to end. So if the fifth wave, our fifth Mano wave, has ended at 314, for instance, at 314% Fibonacci extension level, our expectation is that, the real fifth Elliott wave will also end somewhere near that zone. But it does not have to be exactly as we were expecting, but we have a bit of idea what is likely to take place. And then when it's taking place, we will take advantage of it. And if it's not taking place, we know that there is a change and we'll adjust our strategy accordingly. By using Fibonacci extension and Fibonacci retracement level, we can forecast the end of the second, third, fourth, and the fifth wave. It makes sense? It is also powerful. So in this tutorial, in this third part of this video, which is quite essential because we are using different tools, the wave patterns and the Fibonacci retracement and the Fibonacci extension level. We have a shape and form for our first Elliott wave, but we are applying the Fibonacci retracement and the Fibonacci extension to each internal waves to forecast the next, wave. Am I making sense to you now? So here we are, we have the first wave and the second wave, So we want to know how deep the second wave went down. All right? So if it's 38.2%, we'll expect the real second wave to be also somewhere near that zone, but the price does not have to do it. It's not an exact size. If the third wave went to 314% Fibonacci extension level, we'll expect the real third Elliott wave to be also in that zone. Is just a guidelines, If the fourth Elliott wave went down to, 50% of the third Elliott wave, we'll expect the real fourth Elliott wave to be also in that, to go down to 50%, Does not have to, but we have a bit of idea, If the fifth Elliott wave is sustained, went up to, 138.2% Fibonacci extension level of the third Elliott wave, we'll expect the real fifth Elliott wave also to do exactly the same thing or something else. This is just our expectation, our forecast that we are looking at, So we may say that, our forecast is that the market is likely to end at this X price. If we know the end, if we forecast the end of the fifth wave, we forecast the end of the multi-wave. All right? So if the price reaches that target, we are a little bit cautious because we know that there's a high chance that a reversal may take place here. But if the price went above that target and continue to go out, we need to review our forecast and see that there is a change so we may adjust our strategy carefully. It makes sense? It is also powerful. This is how one can use the first Elliott wave, internal wave, and wave structure in combination with the Fibonacci retracement and the Fibonacci extension to forecast the financial markets. I hope you have found this video also useful and will put into use to make excellent wave forecast. This is the end of this tutorial about how to forecast the financial market using the first Elliott wave like a pro part 1 to part 3. I will be recording very shortly another series of videos about how to forecast the financial market using the second Elliott wave. If you have any question, put in the comment section, all right? And in due course, we will answer your question and record another video, okay, to clarify your question. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to forecast the financial market using the first Elliott wave like a pro part 3, this time using Fibonacci extension and Fibonacci retracement. If you want to know more about Fibonacci retracement and Fibonacci extensions, go to www.dayprotraders.com. See you in the next series of videos where we'll be talking about how to forecast the financial market using the second Elliott wave. Happy trading to you all.